We will now discuss the types of adjusting entries that are identified in your book on page 139. The first of these are prepaid expenses. A note is that adjusting entries are all made at the end of the period, a period being a month, a quarter, or a year. Prepaid expenses. One prepaid expense account that we use in our entries is prepaid rent. The original transaction, January 1, might read, paid $600 for 3 months' rent. You are, in a sense, paying for rent for January, February, and March, and you have not used any of that rent. So, your entry would be to debit prepaid rent for $600 and credit cash for $600. At the end of the month, you are to prepare adjusting entries. You realize that you have used up 1 month or 1/3 of the rent you paid for at the beginning of January. You lived there during January, so you have used up 1 month of rent, which equals $200. We will, in our adjusting entries, expense what we used. So, on January 31st, we will record an entry that debits rent expense for $200 and credit prepaid rent for $200. If you look at the prepaid rent T account, this is what we've done. We originated the prepaid rent on January 1st with an entry of $600. On January 31st, we adjusted prepaid rent by reducing it for the $200 we used up in January. So now prepaid rent has a balance of $400. This illustrates a prepaid rent expense transaction, an adjusting entry. We could also use insurance in this case, and you would replace the word rent with the word insurance.